Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we'll discuss one cost sheet sum where two products are involved and we are required to allocate common expenses. Let us read the question. Messrs. Vidya Pen Company manufacture two types of pen, Sharda Pen and Viveka Pen. These are the brand names, Sharda and Vivek. The particulars for the year ended 31st March 2014 were as follows. Direct material 5 lakhs. This is total material used for both the products. Direct wages, direct labor for both the products. Direct expenses for both the product. And they have given total sales 10 lakhs. There was no work in progress at the beginning or at the end of the year. So there is no involvement of work in progress stock. On the study, it is ascertained that direct material per unit in Sharda Pen consists twice as much as that in type Viveka Pen. Twice means here double. 2 times. The direct wages per unit of Viveka Pen was 40% of that of Sharda Pen. Direct expenses were same per unit for both the pens. Factory overheads were 20% of prime cost. Administration overheads were 50% of direct wages. 2,500 units of Sharda Pen were produced, of which 2,000 were sold. So unit produced 2,500, unit sold 2,000. That means there was a closing stock.
So you
2,500 units of Sharda Pen produced and 2,000 were sold. That means there is closing stock of 500 units. 5,000 units of Viveka Pen produced, of which 4,000 were sold. That means there is closing stock of 1,000 units. Selling overheads were rupees 8 per unit for Sharda Pen and rupees 9 per unit for Viveka Pen. Selling price per unit for Sharda Pen 250, for Viveka Pen rupees 125. You are required to prepare statement showing cost and profit in total as well as per unit for Sharda Pen and Viveka Pen. Direct material in case of Sharda Pen is 2 times double that of Viveka Pen. Let us assume direct material per unit for Viveka Pen is rupees X. Therefore, for Sharda Pen, it is double. So 2 multiplied by X, 2X. There is production of 2,500 units of Sharda and 2,000 units sold, and there is production of 5,000 units of Viveka Pen. Total direct material cost is 5 lakhs. Per unit we have assumed X and 2X. In case of Sharda, per unit 2x multiplied by units produced 2500. In case of Viveka, per unit x units produced 5000. We'll solve this to get the amount of x. So x is equal to rupees 50. So in case of Sharda pen, 2x per unit, that is 2 multiplied by 50, it will be 100 rupees per unit. In case of Viveka, it is per unit x, that is rupees 50 per unit. We can calculate total. In case of Sharda pen, per unit 100 multiplied by 2500, it will be 2,50,000. In case of Viveka, per unit rupees 50 multiplied by 5000, it will be 2,50,000. So 2,50,000 plus 2,50,000, it comes rupees 5 lakhs. This is how we have allocated direct materials. Direct wages per unit for Viveka pen is 40% of those of Sharda pen. Let us assume direct labor per unit for Sharda pen X. Therefore, for Viveka pen, it will be X multiplied by 40%. That will be 0.4x. Sharda 2500 units multiplied by x, Vivek 5000 units, 0.4x is equal to 2,25,000. We'll solve this equation to get the value of x. So the value of x is rupees 50. In case of Sharda pen, per unit direct labor will be rupees 50. Total units produced 2500. It comes to rupees 1,25,000. In case of Vivek pen, it is 40% of x, 0.4x. So it will be rupees 20 per unit. 5000 units are produced. 5000 multiplied by 20. Total amount of direct labor in case of Viveka pen is rupees 1 lakh. In case of Sharda, 1,25,000, Viveka 1 lakh, 1,25,000 plus 1 lakh, it is 2,25,000. Direct expenses were same per unit for Viveka as well as Sharda pen. Let us assume for both the products per unit direct expense rupees X. So X is equal to rupees 10 per unit. So in case of Sharada, 2500 units, per unit 10 rupees, it will be 25,000. In case of Vivek pen, 5,000 units at the rate of 10, 50,000. 25,000 plus 50,000, it is equal to 75,000. First, direct materials. As per our working note, direct material in case of Sharada pen, it will be per unit rupees 100 and total it is 2,50,000. In case of Viveka pen, it will be 50 per unit and total is 2,50,000. Direct labor per unit in case of Sharada pen, it will be 50 rupees. Total is 1,25,000. In case of Viveka pen, it will be 20 per unit. Total is rupees 1 lakh. Direct expense per unit 10 rupees. It is same for both the products. Total 25,000 and 50,000. Now we can arrive at prime cost. Prime cost in case of Sharada pen 4 lakhs, per unit it is 160 rupees. In case of Vivek pen it is 4 lakh, per unit it is rupees 80. To this we are required to add factory overheads. Factory overheads were 20% of prime cost. So we have to take 20% of prime cost. In case of Sharada pen, factory overheads 80,000 we have added, works cost we got 4,80,000. In case of Viveka pen also works cost 4,80,000. To this we are required to add office and administration overheads. Administration overheads were 50% of direct wages. So we have to take 50% of direct wages to arrive at administration overheads. In case of Sharda pen, direct labor is 1,25,000. We will be taking 50% of it. In case of Sharda pen, direct labor is 1,25,000. We will be taking 50% of it. In case of Viveka pen, it is 1 lakh. 50% of it, 50,000. So we got per unit office overheads in case of Sharda pen rupees 25 and in case of Viveka pen rupees 10. We'll add this to get amount of cost of production. We got cost of production in case of Sharda pen 5,42,500. In case of Viveka pen 5,30,000. From cost of production we'll be deducting closing stock of finished goods, in case of Sharda pen, closing stock units are 500. Those will be valued at current cost of production, that is 217 rupees. In case of Viveka pen, closing stock is 500 units. In case of Viveka pen, closing stock is 500 units. It will be valued at current cost of production 106 rupees. So we got cost of goods sold in case of Sharada pen 4,34,000. In case of Viveka pen 4,77,000. To this we'll be adding selling and distribution overheads. Selling overheads rupees 8 per unit for Sharada pen and rupees 9 per unit for Viveka pen. So total selling overheads for Sharada pen 16,000 and for Viveka pen 40,500. We'll be adding selling overheads to arrive at total cost. So we got total cost for Sharada 4,50,000, for Vivek 5,17,500. To this we will be adding profit, selling price per unit for Sharada 250 and for Vivek 125. Based on per unit selling price, we can calculate total sales. So profit in case of Sharda pen 50,000 rupees per unit 25. In case of Vivek 45,000 per unit 10 rupees. We got profit as a balancing figure. This is how we got balancing figure. This is how we have allocated expenses between the two products. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.